Did you know a vast majority of stock market enthusiasts end up losing money? It's not bad luck, it's common mistakes. Stick around to make sure you're not one of them. Welcome, fellow investors. Today, we're about to embark on a journey of discovery, delving into the pitfalls that often trip up those who venture into the world of stocks. Now, you might think you're immune to these blunders, but remember, even the most experienced traders have stumbled. We'll be navigating the treacherous terrain of investment errors, those silent termites that can erode your portfolio without you even realizing it. From diving in without checking the depth to emotional trading, riding the waves of fear and greed, we'll uncover these common missteps. We'll also explore the dangers of following the herd, moving with the crowd without knowing the destination. So, buckle up, investors. Knowing what not to do is just as important as knowing what to do. The allure of the stock market is undeniable. It promises wealth and success, but it's also fraught with risks. Picture this, the stock market is like a vast ocean, teeming with opportunities. Some see it as the promised land of wealth, where the right investments can lead to an abundance of riches. Yet this ocean is also filled with dangerous currents and treacherous depths. The potential for wealth creation is vast. By investing in stocks, you're buying a piece of a company's future growth. As the company thrives, so does your investment. It's an exciting prospect, isn't it? But let's not forget the inherent risks. The market is unpredictable. Today's booming company could be tomorrow's bankruptcy headline. And when stocks plunge, your investment might sink with it. So, while the allure of potential profits is strong, it's essential to remember that the stock market is not a guaranteed path to wealth. Approach the stock market with caution. Now, let's dive into the most common investment errors. One of the biggest missteps is the lack of research. The stock market isn't a casino. You don't just roll the dice. Instead, it's a platform where companies and investors come together. Understanding a company's financial health, industry position, and future prospects are vital before investing. Remember, an informed decision is always better than a blind guess. Next up, we have emotional trading. The stock market can be a roller coaster ride, and it's easy to get swayed by the highs and lows. Some investors panic and sell when prices drop, while others get greedy and buy when prices skyrocket. But letting emotions dictate your investment decisions can lead to disastrous outcomes. It's important to stay calm, stick to your investment strategy, and avoid making impulsive decisions. Last on our list is the notorious following the herd mentality. It's human nature to want to fit in, and the stock market is no exception. Many investors jump on the bandwagon without understanding why a particular stock is popular or whether it fits into their investment goals. But remember, what works for others may not work for you. Blindly following the crowd can lead you off a cliff. These mistakes can erode your investment like a silent termite. They quietly eat away at your portfolio, leaving you with less than you started with. But don't despair. By being aware of these common pitfalls and learning how to avoid them, you can protect your investments and set yourself up for success in the stock market. Why are these mistakes harmful, and how can you sidestep these traps to protect your portfolio? A question that most budding investors grapple with. Let's break it down, shall we? First up, lack of research. This is like diving into a pool without checking the depth. You wouldn't do that, would you? So why gamble with your hard-earned money? The consequence of this mistake is simple but devastating. You might end up losing your investment. To avoid this, always do your homework. Understand the company, its product, its financial health, and its market before you invest. Next, emotional trading. This is when you let fear or greed control your decisions. The stock market is a roller coaster ride, and if you let your emotions drive, you're in for a crash. Market volatility can lead to panic selling or impulsive buying, which can result in substantial losses. The fix: stay calm, stick to your strategy, and don't let market fluctuations sway your judgment. Then we have following the herd. This is moving with the crowd without knowing the destination. It's like being in a race where you don't know where the finish line is. The danger here is that you might end up investing in overhyped stocks that are bound to crash. To steer clear of this pitfall, develop your own investment strategy. Don't just follow the leader, be the leader. In the end, it all comes down to understanding that these mistakes can erode your investment like a silent termite. They're silent, but deadly. But the good news is, they're avoidable. With careful planning, a calm mind, and a bit of patience, you can sidestep these traps and protect your portfolio. Remember, the biggest risk is not taking any risk, but it's also about taking calculated risks. So the next time you're about to make an investment decision, pause, think, and then act. Don't be a statistic, be a success story. In summary, the stock market doesn't forgive easily. It's a thrilling ride that promises wealth and success, but it's also lined with pitfalls that can trip up even the most seasoned traders. We've delved into the most common investment mistakes today, diving in without adequate research, letting emotions dictate your trading decisions, and blindly following the herd. These blunders, while seemingly innocuous, can slowly and silently erode your investment like a termite gnawing away at the foundation of a house. The road to financial success is not without its bumps and potholes, but by being aware of these common missteps, you arm yourself with the knowledge to traverse it more confidently. Remember, it's not just about taking risks, it's about taking informed, calculated risks. By learning from these common errors, you can navigate towards a more secure financial future. Be informed, be smart. If you want to continue your journey towards financial literacy, hit that like button, share this video, and subscribe for more insights. Each engagement, every share, and every subscription not only supports us, but also helps us create more content that empowers you to become a savvy investor. So don't hold back, express your support and spread the knowledge, because the journey towards financial literacy is not a solo trip, it's a community endeavor. And remember, every second counts. Don't skip through the content. Every piece of information is a nugget of wisdom that can potentially save you from making a costly mistake. Also, we've noticed that most of our viewers are not subscribed to our channel. If you find this content useful, do subscribe. It's a small action from your end, but it means the world to us. Remember, a well-informed investor is a successful investor.